Last week, we saw the S&P 500 and NASDAQ making new all-time highs. However, is a pullback about to start this week? Now, if you guys were trading out here on Friday, you guys saw that nasty sell-off we had at the end of the day, and we can thank that in part to Trump once again. So late in the day, Friday, we starting to have some more fears about tariff talks. And essentially what took place on Friday was the fact that Trump went ahead and told Canada trade talks are off, and he's going to go ahead and sign what their tariff is actually going to be. And that is why late on Friday, we saw the market actually freaking out. But also look what we have on the weekly chart. If we come over here and we look at the S&P futures markets, notice, what did we get last week? We ended up with a 9 count. We look at the SPY real quick on the weekly chart, also closing with the 9 count. And if we look at the QQQs real quick, the NASDAQ has already had a 9 count the prior week. Now, if we also look at the MACD indicator, this is a weekly chart of the NASDAQ right now. Notice, as price is going up, making new all-time highs, look at the MACD indicator. Is it making new highs? And the simple answer is no. However, I do want to warn you, the MACD indicator does have a very good separation of the two lines and angle at about a 45-degree angle. Now, if we go ahead and look a little bit more about what Trump had to say about Canada, it's all about the digital tax, and that digital tax is due on Monday. So big corporations like Google, Meta, and even Uber are going to be slated to have a big tax bill come Monday. And we're going to see if they have to pay it or if Canada actually walks this back here just a bit. Now, it's not just tariffs and stuff we have to worry about. However, we are going to be getting closer and closer to that July 9th deadline. And if we see some more fear out there about tariffs, maybe not going as smooth, is this just the first crack that is about to get ugly out here? Because when we look at the 4-hour chart, something we kept talking about on the live streams last week. If you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. But look at this 4-hour chart on the NASDAQ futures. You can see all the way from the low of last week where we opened up. We basically opened up, went a little bit lower on the NASDAQ, and just ran all the way up. If you look at all the 4-hour candles last week, we only had one 4-hour candle that closed below the prior candle's low, and that was right here. So AKA, we had no type of pullback in the market. Now, one of the areas I am watching at some point, I don't know if it'll be this week, next week, or whatever, but we have this minus development in the profile, which is a high probability the market will come back and repair that structure. Now, minus development area, just think about it as nothing more than an inefficiency in the market. Now, with some more Trump news out there, and again, we know Trump has the ability to move stock markets. We can see right here, Trump may name a shadow Fed chair, an unprecedented development in American history. So why would Trump want to go ahead and name the next Fed chair? Well, if we come right over here and we look a little bit more info about this, Trump says he wants interest rate cut 1%. Would love it if Powell would just go ahead and resign. And think about this real quick. If you already know that you're going to be out of a job, aka Powell's job is going to be up in 2026, and Trump goes ahead and already nominates another person to take your job, well, guess what? That person is going to be a talking head, going to be a voice piece for Trump. And it's just going to nag on you. Everything that Jay Powell says he wants to do in terms of not cutting rates yet because, hey, we got to watch out for inflation. The new guy or gal that could be appointed could come out and say, nope, we need to cut interest rates, yada, yada, yada. And eventually you're going to get tired of it. And we're going to see if Trump appoints who's going to be the next Fed. Let me know in the comment section down below. Do you think Jay Powell will actually resign or live out his whole tenure? Now, it's not just that as well. Could we have a situation where we have a buy the rumor, sell the news? And could all that buying last week be about that? We see right now the big, beautiful bill has made it through the Senate, and it's going to be on its way back to the House. And when this is finally all done with, is this going to be a case where everybody says, all right, that's cool, let's go ahead and sell the news? If we look at the fear and greed index real quick, we are still stuck right in the middle of greed. So in the beginning of the year, we were stuck between fear and extreme fear. Now we've been hanging out in greed for quite some time. If we actually look at the timeline real quick, you can see the fear and greed index looks like it's on the verge of even trying to break out of its range it's had this year. The highest range it had was on May 14th. Now, if we look at the most recent investor sentiment survey, this week the bulls did tick up 2 points, came in at 35.1, the previous reading 33.2. We look at the bears though, the bears are still hanging in there, 40.3. previously 41.4. The undecided dropped down a little bit as well. It went from a prior reading of 25.4 down to 24.7. Now, this week will be action-packed with news, and we know the first Friday of the month typically ends up being the NFP data, but hold up, not this week. And why is that? Well, Friday is going to be the 4th of July, which is a holiday over here in the US. Sunday night, China has a little bit of news, but then we look on Monday. Monday, no major economic news to contend with. We do have Chicago PMI at 945. But then we come over and look at Tuesday. Well, guess what? Fed Chair Powell is set to speak, and we're going to see what he has to say. 10 o'clock, we also have ISM manufacturing PMI. We'll also get the JOLTS job openings number coming out. Then on Wednesday, we get the ADP non-farm employment change. On Thursday, we get the average hourly earnings, the non-farm employment change, along with the unemployment rate and the unemployment claim. So we have a lot of jobs data coming out on Thursday. And then on Friday, the stock market will be closed as it's going to be a bank holiday. Now, if you trade the futures markets, lucky for us, if we got to scratch that itch, the futures markets will be open till 1 p.m. Eastern time. Now, I want everybody know right now, Apex 80% off all their valuation accounts. Take advantage of this offer. Use the link in the description box down below. Use promo code Mike and Take Profit Trader 30% off. No activation fee. To take advantage of this offer, use the link in the description box down below. Use code Epitome at checkout. Now, let's come over and look at the QQQs real quick. Last week on the weekly chart, we had a very strong bullish candle closing in the upper third of the range. We already spoke on this a little bit ago. MACD indicator is extremely strong. Now, at some point, we will get a retracement. Now, if this is going to still be a strong bullish move on the way up, we can measure from the swing low all the way up to the swing high with our Fibonacci retracement tool. And notice that 38% retracement would get us right into this gap, almost filling the gap below us. Now, here's going to be one of the clues. You don't want to necessarily jump on the train too close ahead of time, but we have some high volume areas on the profile. And to be a little bit more conservative, it would make sense to wait and see. Let the NASDAQ actually prove to you it wants to start coming down. And if we can really start cracking 511.69, then we increase the probabilities of coming down, hitting that 38% retracement, or even potentially taking out the gap. Now, when we come over and look at the daily chart, we can see we had this rising wedge. We broke out of that rising wedge by going sideways, and then the market failed to go ahead and get the follow through to the downside, and we continue to push on up. But if we look at the last candle on Friday, kind of a candle of indecision. We have a wick on the top. We also have a wick on the bottom of this candle. Now, if we compare that to the Dow Jones, the Dow Jones has a very small wick at the top, but not much at all. Now, the MACD indicator, we've been harping on this for quite some time. If you look, we have MACD divergence as the market keeps pushing up higher. Again, the MACD indicator is simply not confirming those higher highs at this moment. As we come over and look at the 4-hour chart, look how we closed on Friday. We closed with a hammer candle. Now, this is not a bullish looking candle. If you trade candlesticks, you usually see a wick on the bottom. You're like, hey, this is bullish. Not necessarily. All right. It's all about context. Since this is in the context of an uptrend, this could actually be an early warning sign that we're getting ready for some type of pullback in this market. Now, if we are going to pull back, looking at the volume profile on the 4-hour chart, let's see where the highest volume is. And that comes right down to this price point of about 531.32. And guess what? That would be enough to clear out one gap and a second gap as well. And speaking of gaps, look on the 30-minute chart. On Friday, we gapped up, we filled that gap. However, on Thursday, we gapped up and we barely missed filling that gap. We also this week had this larger gap, which we did not come down and even come close to filling out here. Now, as we look at this, here's where Trump basically came out and said, you know what, Canada, we're not dealing with you no more. Trade talks are off. You are going to be given the tariff that we give you. There's going to be no more negotiations. Now, that could just be a taco play. We're going to wait and see how that plays out. Now, if we can start getting below value area low at about 547.20, then I can look to start to target back down towards the lows on Friday. Anything below that, I would want to turn my attentions down towards that first gap being filled at about 541.18. Now, if we open up slightly lower or at the same price point, we don't really go much higher, we can make the case that maybe, just maybe, this is going to turn into an A to B equals C to D pattern. And we can see that starts to get us down in the candle where that gap was actually formed. However, if we make it to a 127 extension, that still would not be enough to completely fill the gap. Now, don't be surprised if the market opens up and we go ahead and we take out the highs and push a little bit higher before ultimately starting that pullback later this week. Now we come over and look at the futures markets. We can see that hammer candle, the last 4-hour candle of the day. And again, we only had one candle that closed below the prior candle's low. The range last week was 1,258.75 points. And again, we had no type of pullback whatsoever. Something we do want to do, and regardless if you trade the equities markets or the futures markets, you want to go ahead and grab your Fibonacci retracement tool, measure from the low of last week all the way up to the high. Now, if we end up going a little bit higher early on this coming up week, we'll simply grab the Fibonacci tool and just drag it up a little bit higher. But at some point, a minimum retracement would be the 38% retracement. Now, you might say, Mike, minimum, if I measure from there to where the 38% retracement is now, that's almost a 480 point move to the downside. Yes, you would be correct. And we can see, look how thin the profile is over here compared to over here. So think about this area is more value in the market, and we'll see if the market tries to pull back towards it. We also have this minus development area within the profile, which comes in from about 22,160 all the way down to about 22,095. Now, value area high is going to be up here at 22,816.75. The point of control will be 22,420.25, with value area low being 22,315.25. Now, if the market does want to start off strong this week, I would love to see the market come up, take out the high from Friday, and then start to come back down. Because if we break value area high and we start coming back below it, then not only is the point of control a high probability target, but we can also pick off some of these other high volume nodes on the profile for potential targets. The first one would be up here about 22,738. The next one would be about 22,669. Anything below that, I'd really want to turn my attention then down towards that point of control. Now, if we look at the daily profiles real quick on the 30-minute chart, notice we were able to make it to the P point for the NASDAQ futures. Now, value area low will come in at 22,703.50. The point of control will come in at 22,737, with value area high being up here about 22,802. Now, if we look at this, all right, this is where we've had a lot of volume built out on Friday. If we start breaking value area low, which is the edge of this high volume area of the profile, then I want to turn my attentions down towards maybe the candle bodies from Friday, somewhere in the ballpark of 22,609. We breached below that. Then I really want to turn my attentions down towards those other volume profile levels that we spoke about on the weekly volume profiles. Now, if we come over and look at the volatility index, we can see on Friday, the volatility index went spiking up. However, it closed green once again. The VIX closed out at 16.33. If we look at this on the daily chart, the VIX looks horrible at this moment. It cannot get out of its own way. However, notice the VIX made a slightly lower low than what we had down around this support area down here. And look at the MACD indicator. The MACD indicator is actually higher as on Friday when we went down, breaking the lows over here than where it was over here. So could this be an early warning sign that we're about to see volatility pick up in this market, especially if Canada wants to shoot back at Trump, or if we find that other countries are giving the US a hard time with the tariff talks with the deadline of July 9th. Now, last week we saw the dollar index breaking below that weekly zone that we had mapped out, but look at it on the last 2 days, Thursday and Friday, we have wicks on the bottom of those candles. Now, the MACD indicator is slightly crossed to the downside, but we want to keep an eye on the 10-year yield. All right, 10-year yield, we still have this potential ABC pattern up here at 4.86%. However, if we break back down below 4.13, that negates that potential ABC pattern on the way up. So this could end up turning into a failed pattern out here. Now with the yields going lower, that actually favors the bulls in the market. Now, if we come over and look at gold actually did not have such a good day on Friday. We see gold actually coming back down, trying to retest that trend line in which we've broken out from. Now, we can also draw another trend line on gold right down here from this low, kind of like this, and you can see we've broken down below it. So we'll see if gold is done going up, or if we're going to get back into the channel and then start picking off some of these high volume profile areas on the composite profile. Now, jumping over and taking a look at the SPY real quick, the SPY on the weekly chart, you can see we had quite the bullish candle on the way up. If I go ahead and I turn back on the 9 count real quick, we can see that on Friday, we did have the 9 count. Now, looking at the MACD indicator, we can clearly see we have a good separation of the two lines. angling up about a 45-degree angle. Now, the one thing I do not like about the MACD indicator, however, is the fact that price is at all-time highs, but the MACD indicator is not even back to the highs that we saw over in this area over here, which we just broke out from. And if we measure from the swing low all the way up here to the swing high, the NASDAQ has moved up 27%, almost 28% from the low without any type of pullback out here. If we actually look on the way up on the weekly chart, we've only had 2 candles that have closed below the prior candle's low. Now, if we come over and look at the daily chart real quick, you can see we're breaking out to new all-time highs. We have that large gap left behind from last week. Now, we had this rising wedge. We broke out from it, and then we went sideways. We did not get the follow through to the downside. So is this just the beginning of a big blow off top coming up? We can also see the MACD indicator trying to get that cross on the way up. However, it is not at a new high. Look at the MACD indicator right over here with that swing point over here. MACD indicator was clearly higher than where it is at this point in time. On the 4-hour chart, we closed out with that hangman candle, which is the weakest of all reversal patterns and something we still want to pay attention to. If we start breaking below the low of that candle, then maybe we'll see ourselves coming down and trying to fill some of these gaps left behind last week. On the 30-minute chart, here's where Trump and Canada had that little spat last on Friday. Boom, we came right down, only to run right back up. So we were able to fill the gap on Friday, and then we made a pretty good charge right back up. However, we still have a gap from Thursday all the way down here about 607. Then we have another gap down here about 600.04. Jumping back over real quick and looking at the daily chart. And as we see the market just keep pushing on up, I want you guys to pay very close attention to the volume profile. We have a lot of volume that has been built out all up in this area, really anywhere from 607 to down here to about 587.79. If we can crack below the lower edge of this, then that really increases the probabilities we can finally get a pullback, maybe all the way down to 560. Keep in mind, if we grab our Fibonacci retracement and measure from swing low all the way up here to the swing high, that 38% retracement comes in very close towards that high volume area, and that would be enough to fill in quite a few of these gaps on the way back down. As we come over and look at the futures markets real quick, notice on the 4-hour chart, we have that big wick on the bottom, and actually the last 2 4-hour candles, all right, this one kind of a shooting star type of candle. Then we get that hammer candle on the way up, and notice we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles before we had that down candle. Then that down candles really just, we basically open and close right near the prior candle's high. Now, we did have quite the wick on the way up, taking out an untested point of control at 62.38. Now, look at the weekly volume profile levels. 62.25.5 will be value area high. The point of control will be 61.45.5, with value area low being 61.13.50. Now, a key note, we do want to pay attention, 61.03 all the way down here to 60.82.5. This is going to be a high probability target. Now, I don't know if we're going to make it down there this week or next week. Normally around a holiday, the markets tend to be more bullish than bearish. And we're going to see if this time is going to be any different. Keep in mind, there is going to be more and more news about the tariff talks. And we'll see if that rears its ugly head. Now, as long as we can stay below this high volume area right up here, then I do want to turn my attentions for the markets coming down towards this area here, about 61.84. If we breach below that, then that would really open the door to coming back and trading within this area, filling out the profile a little bit more. And if that is going to take place, I'd prefer to see a little bit of a strong open on Sunday night, coming back down below that candle. Then we can look to target those areas. Now, this area right here on the profile also correlates with a high volume area on the weekly profile as well. Jumping over and taking a look at the daily profiles on the 30-minute chart, we can see again where Trump came out and basically slams Canada. We get a big push on the way down. But one thing to note, we did not take out the P point. The NASDAQ hit its P point on that move down. The S&P did not. So with that information, wherever the new P point is come Sunday night is going to be a high probability target that I want to go ahead and focus on either Sunday night or Monday. Now, as we look at this, value area high on the daily chart will be about 62.29.75. The point of control will be 62.26 3/4, with value area low being about 62.02.25. Now, if we get a strong open on Sunday night, we get above value area high and we start coming down. I want to use that point of control for a quick target. But if we can start cracking really below this area right here, if we get below 62.18.5, I most certainly want to turn my attention down towards value area low. So if we don't break value area high, but we can start getting down below 62.17, 62.18. I then want to go ahead and turn my attention down towards value area low. Anything below that, I want to turn my attentions back down towards the candle bodies on Friday at about 61.87. Now, if you guys like to learn more about volume profile shapes and what to expect the following day once a shape is formed, then make sure to watch this next video right here.